Candlesticks were invented by Japanese rice traders back in the 18th century. They used them to signify the open and closing price of rice at any given period of time. A green candlestick shows that price is going up, and therefore a red candlestick shows that price is going down. What happens with a candlestick is price will open at this point. With a green candlestick going up, it will then close here. This is the highest point that price reached in this time period, and this is the lowest. Now, there are hundreds of candlestick formations and patterns. There is even an online university that charged $3,000 to teach you all these numerous patterns. In my opinion, and in my trading experience and the other guys here at Mentor Pro, we use about 10 maximum. All we are looking for patterns, clues that price is about to turn. One of my favourite patterns is this hammer pattern, and this at the bottom of a major move. So if price has come down and down and down, we then get a hammer reversal pattern at the bottom of a move. Price invariably will return and move back up. Similarly, at the top of a move, if we were to have a red body here coming back down, and let's have a look at a gravestone doji. Gravestone doji at the top of a major move, this is a major clue that price is about to turn back down again. This body can be a little bit bigger, but as long as the wick is at least twice the length of the body, then this pattern is valid. This is a doji or spinning top candle, and at the top or the bottom of a major move, this is a clear indication that the market cannot decide where we're going to go next, but it is often a prelude to a turn. In price is coming up, it's a sign that price is going to go back down, and vice versa. This is a bullish doji star. At the bottom of a major move, we have a clear sign here of indecision, and that price may or is likely to go back up again. You do not take trades solely from candlestick patterns, and especially not from a doji. A doji is indecision. The best sign that price is going to reverse is if the next candle supports the theory. This is what's known as a morning star. And at the bottom of a major move, we have the indecision doji candle, and then we have a reversal candle going back up again. This is a bullish engulfing candle. Once again, at the bottom of a major move, if the body of this candle completely engulfs the body of this candle, this is a clear sign that price is likely to turn back up again. At the top of a major move, this is a bearish engulfing candle. And once again, if price has moved strongly upwards, we have the indecision candle, and then the body of this candle completely engulfs that candle, is a clear sign that we are likely to see as a reversal pattern back down. This is what's known as an harami or inside bar pattern. Once again, at the top of a major move, the whole of the body of this candle is engulfed by the previous one. Once again, this suggests that price is likely to turn back down again. This is known by a number of names, one of which is spinning top. Personally, I prefer tram tracks. And again, at the top of a major move, we have a green candle followed immediately after by a red candle of equal size, and this once again is a big clue that price is likely to turn back down again. Another bearish pattern is a shooting star, and this is the start of a shooting star. We've had the major move up, we have the indecision candle here, and as I explained to you earlier, you don't take trades solely from this, you are waiting for the next candle to form. Similarly, this is a doji star, once again indecision at the top of a major move. This then is an example of the evening star. So we have the indecision candle after a major move up, then we have a red bearish candle. That is the sign that price is likely to turn back down. You need to learn to be flexible with all things to do with Forex. In an ideal world, this is a perfect example of an evening star pattern. We have a green candle, indecision, and the red is exactly the same. However, often you will see a situation where price comes up and we have indecision for a number of candlesticks before we get the move down. But this is just as valid as this one, and flexibility and patience and discipline are all part of the characteristics of a successful trader. You cannot trade just from candlesticks, but they can be spookily accurate. And let's have a look at some real live examples. This is the Australian dollar versus the US dollar on a weekly chart. And you can see clearly here how we had a pin bar reversal candle at the bottom of a major move, and this move was for many hundreds of pips. At the top of the move, what happens? This is an engulfing candle. The whole of the body of this candle has engulfed the body of this candle, a sure sign that price is going to reverse back down again. Equally, at the next move, now we have a pin bar reversal candle here. It's not at the bottom of a major move, and had you taken this, it would have lost. The next big move at the top, yet another engulfing candle. Huge one, but a clear sign that price is turning back down again. Another fake pin bar reversal, but it would have won on this occasion. This one, again, you have the pin bar reversal candle at the top of a move, moves back down again. Down the bottom, you have an inside bar. At the top, you have an inside bar. So lots of real life experience shows us that candlesticks are important. Here on the Euro USD on a daily chart, you can see how we had tram tracks, reversal at the top of a move, pin bar reversal candle at the bottom of a move. Here you have that shooting star pattern. You have the DOJI spinning top, indecision at the top of a move up. You have the reversal candle back down. Next candle at the bottom of this move, reversal candle back up. More tram tracks, and possibly could be an engulfing candle pattern here at the top of the move. So they are important and they do give clues, but as we will show you throughout the rest of the course, you don't use them in isolation. A few more examples for you here. This is the British pound versus the US dollar on the daily chart. Once again, we have this favourite of mine, the pin bar reversal candle at the bottom of the move. At the top of the move, you have the shooting star once again. Then you have the engulfing candle. Here you have an engulfing candle again. So as I said to you earlier, there are lots of examples. You need to get into the habit of checking your charts. I pay more attention to candlesticks on longer time frames. For example, I do not trade 15-minute charts, and I find that the candlesticks are not as reliable. Anything from 4-hour, daily, weekly and monthly, then I do pay a great deal of attention, because they do give clues and heads up as to where price is likely to go next.